The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. And I was listening to Basil Chapman's show before we came on, and he was talking. Someone asked a question about a crash scenario with 1987. First of all, the crash isn't going to come from the high day. It's going to come in the middle of the move somewhere, much like we did in October of 1987. We made a 618 retracement on October the 2nd. The reason why I am so watching what's happening now is because what's happening in the currency markets. The first chart that I posted into Tiger TV today is the Euro chart, the weekly Euro chart, and as you can see, we're starting to break down very, very badly, and we've broken below the 786 of the last year's low. That sets up a target. Our original target on this is somewhere around 110 to 105, and we're really starting to accelerate now to the downside. What's important about this weekly chart is if you'll go back to 2008, you'll see that the market had made a slightly higher high right around March of 2008, and then the market, headed down. I think this is a situation where the money starts to move, and we're seeing money move rapidly today in the foreign currency markets. They're running to the dollar like there's no tomorrow. It's a come to Jesus moment. We've blown through the 786 on the daily level, and we're getting close to, assaulting the old highs at 85, only a point or so from there. So something really big is happening. I don't know what it is. All I know is that it's something, really, really big. On October the 18th, 1987, I was at a wedding of one of my good friends from Drexel days, who was a very famous trader. He basically traded bonds and stocks, but he had gotten married, and it was a very large Jewish wedding at the Beverly Hills Country Club, and both of my daughters, because they knew their kids and stuff, so the three of us went to this wedding, and it was really spectacular, and we just had a wonderful time. And coming home Sunday night, I dropped the kids off at their home in Westlake Village, and I drove on up to San Luis Obispo and Pismo Beach, where I was living at the time. And when I got there, there was a phone message from a friend, and he was someone who was in Tokyo, and he had mentioned that the markets were going absolutely crazy. And so I called the Drexel overnight desk. I was no longer with Drexel. I'd been 5 years since I'd been there, but they had told me that the Swiss franc was up 250 pips, and gold was up about $35 to $40. The limit was 50. And remember, gold was in a pretty bear market in October of 87. It was very bearish at that time. And then we had no stock index futures. We didn't have, overnight markets of any kind. So we had no idea what was going to happen until the opening on October the 19th. And the Dow had closed, the Dow closed around 2,500, I believe, somewhere around that ballpark. I'm not sure. But I remember the S&P closed around the 260 level. And it opened 40 points lower, as I recall. Now, 40 points back in those days, folks, is equivalent to 400 points in the E-mini because it was 10 times the value. Each point was worth $500 and not $50 like it is now. So that'll give you an idea of what happened. So what I'm following here is the currency market. Something really big is going on. I don't know exactly what it is, but somebody knows. This is certainly not me. But the one thing I did want to do is I wanted to show you the relationship between the S&P and the euro, because sometimes it doesn't correlate at all. If you can see, since the mid-2012, the stocks have gone crazy to the upside, and in 2014, the euro in March, started down, and stocks continued to go up. So there are periods where you have this divergence or not. This is real money, folks. This euro is many, many times bigger than the stock markets, and that's all the stock markets. So it's a big thing that's happening here. We're seeing a lot of things that are occurring. I will say this, and I've been saying this for for quite a long time, and that is that we are in an era of higher interest rates. I'm going to put up the chart for the Treasury bond market, and you'll see that. Let's see if I can get this thing in here so I can get everything in. Yeah, I think I can. You can see how quickly we've come down from the 618 retracement. If you'll give me a second here. Oh, dear. Don't ever give an Italian a job because he can't walk and chew gum at the same time. Hold on a second here. Okay, there's where we are. I want to move that up just a bit to see where we are. Okay, now I can post this into Tiger TV. I've had all kinds of computer problems all night long. My Skype is out. I have to do this on the telephone today because my Skype's not working. The only other time that I can remember when Skype was not working was August the 15th of 2007. Tom and I were on the phone, and the Dow was down 350 points, and the Russell was actually up on the day. And that was one of the biggest lows we had. And once we took out that low, that led to the crash of 2008. But that's a totally different subject matter because it's related to cycles. But as you can see here, the bonds have sold off dramatically. It's one of our biggest sell-offs since last May. And it looks like, we're challenging the 137 level very soon, which will be very, very key support. Basil mentioned 136, somewhere between 136 and 137. Should we break that, we'll be looking at 131 minimum on this to the downside for the Treasury bonds. And that's that is a much larger, commodity that is being traded than the S&P or the other things that, we have that we watch. Now, I also wanted to bring up the Treasury notes, because this is the larger of the two markets. I keep mentioning that it's 6 times the size of the others. And in this one, you can see the divergence that occurred the other day that we were screaming about, and now we see why. And we're breaking down very, very badly here. And we're almost ready to take out yesterday's lows, pretty soon here. So if, in fact, that does happen, it will reconfirm that we're looking at something even more bearish. But notes have broken, 3 points in a week, and boy, that's a lot of interest rates. I think it's about a third of a point in interest rates, and these are the things that we calculate our interest rates on our credit cards and our car loans and stuff like that. So it's a very, very important thing that's going to happen. I was hoping to have Rich Anderson on today from Anderson Capital Management, but with the volatility that we're having across the board and all these things, he's not. He just doesn't have the time that he can take today to do this, because he does a lot of currency trading and does a lot of bond trading, and of course he does his usual things with the grains, and the grains are just getting, totally hammered, day after day here. So it's very interesting. Now, since we're on the subject of money, I think we should follow what's going on with money, because if it doesn't go in, to the euro, it has to go someplace else, because whenever you go into the euro, it has to be a cross rate against something else, either the U.S. dollar or the Swiss franc or something else, because there's two sides to each of the transactions. That's why they call it a cross rate. So now if we take a look at one of the most strongest of these commodities, and that is of these futures, Forex contracts, it is the Swiss franc. And the Swiss franc has bottomed down around 8,700, and we've been traveling straight up now to the 93 level, and it looks like we're going to go even higher into this level right here. This is a very dramatic move, folks, that's happening in the U.S. dollar today. This really means something. This is either going to be a breakout level in the dollar, or it's some type of a very serious top that could be happening. The euro tells us that this is just the beginning. We're very oversold right now, but it does say that we are going to go a lot lower in the euro, and our price targets on the long-term weekly euro have always been around 115 to 118, as I recall. Those are the numbers that I've been looking at for a very, very long time. we have been in the last 10 weeks. This thing has had no relief. It's just been straight down since we hit that 139.50 level in the euro that completed the Gartley pattern up there, and it's just been straight down. And then today, being down 200 pips is you have to go back in the history books to see the number of times that's happened where you've had a 200 pip move in a currency. That's a very, very big event. So you have to pay attention to it because it does mean something. The Australian dollar is another benefactor of this move. I'll put the chart up, and you can see that the Australian dollar has gotten as well as continued its strength is what it's done. Not nearly as much as what's happened with the Swiss franc, because the Australian dollar has basically rallied only about 100 pips, whereas the rest of the markets have, especially the euro, have moved a great deal, and that tells us that the Swiss franc, which is it used to be a huge currency back when it was backed by gold, but it's not anymore, and so we have to keep that in mind too. The gold is another one that's beginning to. It had a little bit of a rally today, but has given almost all of that rally back, which is not a good sign. And when we get back from the break, I want to talk about the silver market, because silver looks like it has $17.50 per ounce written across the top of any coin that you're looking at. So this is something that we want to keep in mind here. But we'll look at the silver chart when we get back. Well, let's just look at it now, since I'm in control of the machine and we've got a little bit of time here. These metals have been really been looking bad for several weeks now. They had a chance back on the 14th of August. They really had a chance when the silver had made the 786 retracement. But as you can see from the enclosed chart, we broke below there at the 1930 level, and we're trading at 1916 right now. Gold has still held this 786 level. It is still holding above this level, so gold still has a chance. But every time it rallies $10, it seems to be hit with a great deal of selling. We went from 1068 today to 1268 to 1279 today in a period of about 15 minutes. And if you walked away from the machine, you came back, it was back trading at 1270 again, and now it's back to the 1268 level. So it's not acting very bullish either, and that's one of the things you want to keep in mind. If markets are not acting right, they're certainly not going to turn around and surprise you. If they're not rallying on good news, then we'll see. Because usually when you have a strong dollar like this would be something that you would think that commodity markets would actually like that, but that is not what's happening this time. So we need to keep watch why that's occurring. We'll have to see if this is going. We've got this Dow is still up pretty strongly today. Dow's still up 49 points, and we'll be back right after the break. And I think we have our first break coming in. 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, I've posted into Tiger TV a chart. I wanted to continue on with the story about October 18th, the Sunday preceding the crash in 1987. We were at a big wedding in Beverly Hills, at the Beverly Hills Country Club, and it was a Jewish wedding, and one of the things that they do during a Jewish wedding is they raise the groom up on a chair. All the men hold him up on the chair, and then they give him a toast, and Fast Eddie was the groom, and he toasted to everybody in the market. He said, "I hope you're all short," he said, "because this coming week is going to be a real ball buster," is what he said, and of course everybody laughed and everything, and that next day was the worst day the stock market had ever had. I remember that day like it was yesterday. It was really fantastic. I happened to be short, but scared to death because I was afraid that we were not going to get our money out of the accounts because there was just no liquidity in the market at all. It was just it had just dissipated. The spreads were $10,000 between. That would be a 200-point spread today. In the E-mini S&P. In other words, the buy would be 200 points lower than the sell, and you couldn't get anybody to take either side of the trade. So we don't want to go through that again. I don't think it'll happen that way. It usually happens a little different each time, but it's going to be interesting. I do think we're going to have something like that happen, and the reason why partly is this chart that's up here that shows, where we are with the RIDEX funds. In other words, the bulls and bears. We've seen it in so many different things. It just hasn't topped yet. That's the That's the main thing. By the way, I did get 3 emails this morning very quickly when the New York Stock Exchange Index made a new high at 11,008. The old high on July 3rd was 11,006. And I said on the show that, I probably ought to resign if it closes the week into new high ground. That's what I said. If it closes in a new high ground, I had to give it because I was looking at the second and third. This is only the fourth. So we'll see if this means anything or not. But like my wife Sarah told me, she said, you better not resign because Tom might just accept it. So I actually enjoyed this radio show, but who knows? Okay, anyway, that's the end of that story. We'll have to, see what's happening. Follow the money. When you see something crazy happening, like what's happening in the euro now, and you might see it in the bond market or something like that, when money starts to get scared, believe me, it will hit the stock market. It's because those folks are absolutely paranoid, just like most of us futures traders are. And remember, the paranoid person only has to be right one time to prove himself. So we'll have to, to wait and see. But we did make a new high in the NYSE index, and if we close in a new high ground, either today or tomorrow, I will have to say that, all this stuff is for naught, and I guess we go up forever. Don't really think that, but that's what I'll have to say. So that's the name of that story, and I'm sticking to it. So we'll see what happens. All right, let's get to the grain markets. The grain markets, as we mentioned, are under a great deal of pressure. The only hope that the corn market has is if we get a freeze. And we're into September now. They start harvesting the corn towards the end of September, early October, and middle of October. And if we get a freeze in that time frame, that can affect the crop a little bit. But frankly, the crop is so big, they're going to have to freeze over Lake Michigan in the middle of September in order to affect this corn crop, I believe, because they're not going to have a place to store it. That's the bottom line of what you're looking at. So you just have to keep in mind that that's what we're watching. Oh, we got one of our buddies from Florida. Scott, are you there?
Hey, Larry, how you doing?
I'm good. Hey, Scott, we're going to come up to the break, so stay with us after the break, okay?
Will do.
Good talking to you. Where'd you disappear to?
Oh, I'm around.
Okay, what can I do for you, my friend?
Okay, here's what I wanted to talk to you about was the CHF, because I think it's weak. And also want to talk to, because I think it's the USD over the CHF if you look at the cash markets.
Sure.
And it's going up, so that it's relatively weak to the U.S. dollar, just like the Japanese yen. The Japanese yen's going up. But the Canadian dollar, which is also the USD over that currency, is going down. And so it seems to me like the strength is in the Canadian dollar of those
Yes, the Canadian is the stronger of the markets, that I follow. I try, I watch the euro, of course, the most, but then I watch the Australian, the Canadian, the British pound, and the pound is under, more weakness too. It topped a few months ago at 172 at that butterfly pattern, and now we're down here at 163 and change, and doesn't look like it has any friends yet.
And the other side of it is the Australian dollar does look strong because it's, are we on a break or do I?
Yeah, we're going to take a break. Stay with us and come right back, okay?
Sure thing.
Stay with us, Scott. Thank you.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back with our friend Scott. How are you, my buddy? What's going on?
Well, I'll tell you what, Larry. I've asked this question in the past. I don't know if I've asked it of you. I end up scratching my head at the end of an answer, no matter who answers it. But and it's really it annoys me that you can talk about the Japanese yen, the Swiss franc, or the Canadian dollar, and the currencies are flipped on the futures as compared to the cash price. And so to me, if you say something's bullish, it's going higher. But if the Japanese yen is going higher in the cash market, that's bearish.
Absolutely.
So what is bullish and what is bearish? I mean, when you look at does bullishness refer to the strength of the currency?
Basically, you're long the yen, short the dollar. That's what that means. Now, the reason why we have a crazy market, I guess Basil would call it a bifurcated market, but the Forex markets always trade with the cross rates, but the futures market, they trade the spot currency versus the U.S. dollar. They started trading in 1972 when Leo Malamed had them approved for futures trading at the CME, and they were immediate success. But then Forex banks became more and more realized that they were going to have a huge market here in a few years, and it wasn't until the right after the crash of '87 that market became big. But what happens is people that trade the futures don't understand that they're trading a cross rate against the U.S. dollar. So many times what they're doing is they're looking at that rate, and if you look at it like you were just talking about with the yen versus the dollar, if you look at it the other way, one way it looks bullish, and the other way it looks bearish. So what you have to do is just to look at the pattern. That's what I do, because I frankly don't understand it either, Scott. It's a very, very difficult thing, for me to understand also, and I've been in this business for 50 years, and I still don't understand parts of it.
Well, I'm still, for clarity here, if you say that the Japanese yen is bullish, then its price should be going lower on the cash market. Is that correct?
That's correct, because the yen used to trade at 360. That was the high in the yen way back in 1989 when the Nikkei was trading at 39,000. It's at 15,000 right now. But on December 30th, 1989, it hit 39,000.
Larry, not to cut in. Well, I am cutting in. Sorry about that. But just to make it clear, because I don't care what it did in 1989, today the yen on the cash market's going higher. That's correct. Bearish. That's bearish.
Correct.
And when you say bearish, it is the standardizing your terminology so that if you say bearish, I know exactly what it's doing in both the cash market and the futures market. It's not a comment. It's not a commentary on the direction of price on a chart. It's reflecting the strength of the currency, regardless of whether you're looking at a cash market or a futures. Is that correct?
That's correct. Absolutely.
Okay. I appreciate it, because I don't think it's always stated clearly.
It isn't, and it's a really difficult subject. I can tell you that right off the bat. It is a very difficult subject.
Okay, I do appreciate that. Thanks. I appreciate it.
Hey, thanks for calling in, Scott, and call in again. We enjoy talking to you.
Will do. Thank you. Bye.
Okay. All right. We want to talk a little bit about the gold market, folks. I've already mentioned silver, and, silver is the running buddy of the gold. And as you can see, we have hit the 786 retracement down here this week at the 1263 level. We were able to rally $20 off of that low. That was today's high at the 1279 and change, and we've given almost all of that back, and we're much closer to the lows of the week than we are the highs of the week, which usually is indicative of a market that's ready to break out to the downside. If we break out to the downside in the gold here below 1260, that sets up a price objective of around 1212 per ounce. That would be the big ABCD move starting last March when it was 1385. We came down to 1235 up to the 61% retracement at 1348, and that would give us an ABCD down there at 1212. And if we go below 1170, that was the low we made back in December. If we break that low, and there's a chance we can, because if you look at this chart, since March, we've had nothing but lower highs, just lower highs all through this time, and that's a sign of a bearish market, folks. And if we go below the 1170, the price objective that you're looking at on the weekly chart on gold takes you well below the $1,000 per ounce level. I'll put that chart up, and you'll be able to see, because it would bring you in to the 786 retracement, which would bring you in at around the 960 per ounce level. So going below that 1170 sets up another $200 to the downside, which is $20,000 per contract. So this is a very important weekly chart. We're at an important point. Well, we're always at important points, but it's extremely important in gold where we are right now, because breaking below that 1263 sets up a much lower prices, and that's what we're watching. We talked about the XAU, the gold silver index yesterday, and when we were looking at that, we said it must hold that 98 level, and so far it's done that, but it's not looking very good, as we come to press today. We'll put that up to take a look at it, because even with the market as strong as it was, the XAU couldn't rally very much, and that's when gold and silver were up earlier in the day. So that's another factor that's telling us that this thing is starting to. We just broke 98. That was the key level that we were watching for yesterday. And this chart will be the combination of both gold and silver, and it will show you that this market is really starting to weaken in the precious metal markets. It's we're very close to taking out the lows from June here. Once we went below 98, that was the first sign that there's trouble in River City, and that's what we talked about yesterday with our friend from I believe he was from Massachusetts. And below 98 is where you'd want to bail on this, and I believe you still had a profit in it at that time. So this tells us that this market wants to break now. I mean, it stopped at the 382 3 times over the last 4 months. Now we're breaking below that. It couldn't rally, and silver and gold are weakening up. This is telling you this gold and silver index is not looking very good, folks. If things don't go up, they only go the other way, and that means they go down. So we'll have to watch it. We're getting massive selling across the board in the grain markets. Wheat's broken well over 50 cents over the past 6 or 7 trading days. Corn is at a level that people didn't think it could ever get to again, but in fact it is there. Let's just pull it up here, and we will take a look at corn because it's really in what you would call it the disaster zone. Let me put the daily up here, because once we broke. Wow, see, we have really taken the luster off of the corn market here, and I'll put it up here so you can take a look at it. We have a little support here, which is a 1.618 support down at 344 per bushel, but frankly, that is such a small amount given where we are. It just looks much lower. On the long-term weekly chart on corn, which is something that I talked to with Rich, you're going to see a really bearish chart here going back over the past few years. And as you can see, we're almost ready to complete a very, very large ABCD pattern here in corn that will, I think we're there right now, as a matter of fact. No, not yet. We've got another 25, it looks like another 30 cents to go in corn just to make the long-term ABCD on the weekly, and that's what we're following now. That would give us a price about another $1,000 lower in corn, around the $322. Well, let's slow down here a minute. $3.22 per bushel level in corn is what the next target looks like, and with the action that we're having this week, it pretty much tells you that it certainly wants to go to at least that level, and possibly even more. It's hard to believe, folks, that just last year we were trading $3 a bushel higher in corn. That was $15,000 a contract on the way down. So if a farmer didn't hedge his crop, which most of them do, because when they get prices like that, they know they're not going to be sustainable, and they don't care whether they go to $8 or $9. But if they can get corn at $6 and only cost them, $2.90 to plant it, that's really good profits for them, and that's what the bank likes too, because they get their money up front and they don't have to worry about what happens with the crop. So, because they insure it by going into the futures market and selling or buying futures contract to protect their crops, against the insurance that they have at the bank. So it's a money business. That's a fun business to be in if you happen to be a farmer, but if you're not a farmer, it's not that much fun. Okay, now I did show you the chart of the bulls and bears for IRA. In other words, the number of people that are putting their money into the IRA accounts for cash and stuff like that. And we hit all-time record lows this past week. That chart actually came to us from one of the people at the Market Technicians group. He's a CMT member. I believe his name is John Hampson. And he did a couple other charts in there that showed the expanding triangle that we're seeing across all these things, but that hasn't occurred yet. But when it does occur, you'll know it. The market's gonna tell you that there's there's trouble in River City, and then you'll know that there's something not right, and you'll know. But it hasn't happened yet. It's still nothing's really changed. Okay, we want to take. I had to use the phone today because my Skype is broken, like I mentioned before, and that in itself makes it really difficult to do the show. Okay, I want to show you the wheat market because we had an incredible ABCD sell late last week in the corn that we talked about on last week's show, and since that time, wheat has dropped 50 cents a bushel, which is $2,500. We made that 3 drive to a top pattern up at the 578 level, and today we hit 528. So it dropped 50 cents a bushel, which is $5,000, which is a great deal, big move in just a matter of 6 trading days. So we don't see moves like that all the time, but when they do happen, it's really it just makes you a happy person if you happen to be on the right side of it. If you're on the wrong side of it, totally different picture. Remember this, folks, when you're in a position, and not having a position is a position. In other words, you haven't made up your mind yet, that's a good thing. But it's much better to be out of a market wishing you were in than in a market wishing you were out, because that's a terrible situation to be in, because you're in a market that you're already getting banged up on, and then you usually make the number one absolute death trading error that you can make, and that is add to a losing position. Nothing is more stupid in this business than that, folks. You can trade without a stop. You can over-leverage yourself. All those things, you could be okay. But if you add to losing positions, you're waiting for the death knell to hit you. The guy with the sickle and wearing the Unabomber robe and stuff that's swishing the sickle back and forth behind your back, Dr. Death, he's waiting for you, because when you add to a losing position, you've done 3 things wrong. 1, your overall premise of the market is wrong. Very, very important. Number 2, you've exposed yourself to increased risk by adding to your position. That's number 2. And number 3, you've violated every possible money management rule by not using either a stop or some type of a money management rule to get you out of the market. So you got 3 things against you if you add to a losing position. Don't do that. I've tried it a few times over the past 50 years. The number of times that it works has been 0. Never. I can never remember adding to a losing position that turned out right. And that goes back to that old story. It's a good buy at 10. It's a good buy at 5. It's a good buy at 3. It's a good buy at 2. It's good buy house, good buy car, good buy boat, good buy wife. And that's how it ends up. So you don't want to add to a losing position. Not a good thing. That's the end of my lecture for the day. I'll get off my soapbox and move on to door number 2. We'll see what we have going on in door number 2. The meat market, slow down a bit here. The hog market has broken quite a bit and has rallied back a little bit. The cattle have broken somewhat, have also, had put some type of a top in. So those are the only commodities. We've had a few things like coffee had a spike rally and stuff like that, but the number of people that trade coffee you can count on one hand, and that's if you're a double amputee. So it's not a very big market. And the other markets are all weak. I mean, there's just selling all across the board, folks. That's the bottom line. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, folks, I've had a request to take a look at the IWM, which is the Russell Small Cap. And as you can see, we were trading at the 61% retracement of the last down move where we've been for the last 3 or 4 days. The same person also asked to take a look at the biotech index, the IBB, and as you can see, we have made a double top, very similar to what we saw in Apple. The charts look the same, totally different things that we're looking at, but it is a potential double top, and considering the market's very strong and it is not falling through, this could be a sign of some type of weakness possibly, so that's what we're watching. Now, I've had another request to take a look at a subject that I should know a whole lot about, and that is natural gas. This is one wild thing to trade, folks. This thing moves like the old pork bellies used to move. They don't trade bellies anymore, but natural gas is a fun thing to trade. It's pretty liquid, and it gives you some really good signals. And as you can see in this natural gas contract right now, is that we have a potential here for a triple bottom where each of the bottoms are equal. That must mean it's getting down close near the cost of production. Usually that's the case, but not always. But when we get down to around 3.73 per cubic feet, you should be able to find a pretty good bottom. That's another $600 or $700 from where we're at right now. The last move that we had that took us up above $4 per cubic foot was nothing more than a nice ABCD correction coming in at the 38% retracement, because the market has been, very, very bearish. Here again, if we go below, 3.7 per cubic feet, you're looking at, you could go back to where we were just a few years ago, down around the $2 per barrel level, because you can very easily do that. I'll put this larger chart up to show you some of the swings that we've had, because we got all the way down to under $2 per cubic foot not too long ago. And so what we're doing now is just making a really big retracement here, on the long-term charts, showing you that this area of around $3.70 per cubic foot is going to be, pretty good. If you'll notice that in February of 2014, you'll see that big bar down. That was the expiring contract. I happened to be in that. I happened to be in it early in the day and did very, very well. I took a couple of points out of it, which was $2,000, and it dropped $11,000 that day. That was the largest move it ever had, and I got out with a quarter of what I could have got out, but I was happy with that, so not a problem. But it does have a lot of volatility, and it's a good thing to trade. It has good liquidity. I've traded it enough that I see that the fills are good when you have a stop order. When you put your limit orders in, it doesn't take long to get filled. They're not, they're never playing with you anymore, because of the electronic trading is very, very fair to all of us. So that's not a problem. Years ago, when the brokers held the decks in the pits, there was preferential treatment. If there was an order to buy, 500 contracts of natural gas, they were buying it way ahead of them, because they knew if it got to that level where they were buying, they were wrong, so they didn't have any risk at all. That was really the advantage of being a floor trader, that you had access to a deck, but frankly, it was very difficult to get access to a deck because they're so valuable that nobody wanted to share that information. That's not a problem anymore, because we're all equal. We've got electronic trading. I'm sure there's some games played with high-frequency trading and stuff like that, but basically I don't think it makes any difference. I haven't seen any difference in the last 5 years when all this stuff really started to raise its head. So we'll see if that's going to continue, but I don't see anything now. So live every day in an attitude of gratitude, and may God bless. And your homework assignment is to do something good for someone who doesn't have as much as you.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
You're watching Tiger TV.